All right, so we're gonna go ahead and get started here. I know there's a few people still signing on, but we're gonna go ahead and jump in. So thanks for joining us. My name is Austin Farmer. I'm a project director here at the Retail Coach. I'm joined today with Kyle Cofer, who's also a project director on our team here at the Retail Coach. I actually work on most of our projects in the Southwest and the West Coast, and then in parts of the middle of the country. So Tennessee, Kentucky, and some of the Midwest, Iowa, some of that general area, Nebraska. And Kyle actually manages a lot of our projects in the Southeast and then up in kind of the northern part of the country. Thankfully for me, some colder areas than I do. I think you were in -9 degrees last week up in North
Yeah,
Dakota.
yeah, it might have been a little bit colder than that, but I do take the northern states and have kind of learned my lesson there. You got to get ready for the cold, and I saw that firsthand last week.
Yep. Awesome. Well, thanks for jumping on, Kyle. Kyle's actually based in our headquarters in Tupelo, Mississippi, and I'm here in our Austin office in Austin, Texas. We've actually got a couple of other of our team members online as well. So Riley Lefevre, who's our marketing coordinator, is on as well. And a couple of housekeeping items. Riley is going to be watching the chat and Q&A sections. So as we're going through this presentation, if you have questions or if you want to ask us something, feel free to do that as we're going, and Riley will keep an eye on that, and she'll jump in and make sure that we're seeing all those questions and keeping up with some of the chats. And one housekeeping item real quick before we actually jump in, we're actually recording this session as well, and we'll send out a video of the presentation. So don't feel like you have to take too many notes or like you might miss something, because we'll make sure that you have the slides and the recording after we go through the presentation. So that said, today, the webinar today is focused on retail trends and expansion plans for 2022. I think, Kyle, I'm not sure about you, but everyone I talk to is tired of hearing about COVID. Seems like we've finally gotten to that tipping point where we're past COVID. Most of the retailers, they're telling us, hey, we're looking past COVID. We're getting back to some of our expansion plans. And so we want to talk a little bit about that and focus on the future more so than really hammering in on COVID. So we'll be talking a little bit about where we're going from here, what we're seeing from retailers, and then what you can expect as a community in terms of who's expanding and how the retail landscape is changing a little bit. If this is your first time with us or you're not familiar with the Retail Coach, we are a retail recruitment firm. So we have about 20 years of experience, actually over 20 years of experience working with cities and economic development corporations to help analyze their retail market. So figure out where there's retail potential in your community, and then actually go out and recruit those retailers to your community. So we actually act as an extension of communities, economic development teams, or city staff to go and leverage our relationships with retailers to bring them into your community. We've worked in over 650 cities across the United States in more than 40 states. And in just the last 5 years, we've actually successfully recruited over 6 million square feet of new retail for those client communities. So what we're going to cover today, we're going to spend about the next 25-30 minutes going through the core sections here, and then we'll jump into Q&A. But we're going to talk about post-COVID retail trends. So what we're seeing from retailers coming out of the pandemic, really for the rest of this year, but also into next year. New concepts that retailers are focused on, and really how their concepts are changing and evolving. And then a retail outlook and retailer expansion plans. So really what retailers are expanding and what those expansion plans really look like. So jumping into retail trends, what does retail look like moving forward? The reality is COVID has impacted how retailers and restaurants will do business in the future. I think it exposed a lot of weaknesses in the brick and mortar and the online retail worlds. And so a lot of retailers have spent a majority of this past year actually focusing on how to shore up their business and how to make sure that they can actually evolve to be more efficient, be more weatherproof, if you will. So if new pandemics come, or if there are other issues in the future, they can kind of weather those storms a little bit better. And it's really changing how they do business and see business. The first trend that we're seeing that's coming from that, and kind of the evolution out of COVID, is that retailers and restaurants are going to continue to integrate technology into their business. We saw this a lot leading up to the pandemic, really, certainly through 2019 and 2020. We saw really a proliferation of in-app purchases, in-store purchases, or pickups based off of buying things online, the integration of e-commerce into brick and mortar, into the supply chain, and how that affects the physical brick and mortar stores. But we're starting to see a lot more of that adoption integration really across the board, not only just from a pure retail, so kind of soft goods or hard goods perspective, but really from a restaurant perspective as well. So fast casual restaurants, quick serve restaurants, even the casual sit down in some nicer restaurants. And the chart we have here is really kind of a summation of what we saw through COVID-19. And it's the technologies and that integration of online, offline, where we saw some accelerated shifts, and then where we think most of those retailers have adopted certain platforms and services that are here to stay for the future. And so that accelerated shifts, that green box there, we really saw a lot of the retailers and restaurants that didn't have that integrated technology start to focus more on integrating that. So you saw a lot of new store or restaurant apps, or the rollout of a lot of these new apps or new functionalities. The biggest one, I think, is buy online and pick up in store. So really getting someone to actually commit to a purchase on their phone, on their laptop, and then be able to come in and actually pick that up in store. That helped a lot of retailers and restaurants not only survive COVID-19, but actually a lot of them grew through that because there was a convenience factor there that really helped drive their business. And then some of the new ones that are potentially here to stay, where we saw a lot of growth, was buying direct from social media. That's been a big push for a lot of these brands on Facebook and Instagram and TikTok and some of the big social media platforms. We're seeing those brands really invest in being able to have that purchase happen on social media, and then be able to get those users or customers to come into the store and engage at a store level. Purchasing pre-owned items online. So a lot of new retailers pop up around the pre-owned space, or around kind of the thrift shop mentality, and taking that online. QSR drive-throughs, which we'll talk about here in a minute, but we're seeing kind of the importance and the shift from a quick serve perspective to drive-throughs. We're actually working in a community in Southern California, and we helped get a Chick-fil-A drive-through that's actually their location is drive-through only. It's one of the first in the state where they actually don't have an interior in their restaurant. It's all drive-through and all online and pick up in store. So we're seeing a lot more of that. And then the in-store self-checkout. I hate this one, but that's unfortunately where it's going. Most of the stores and grocery stores that we have here have some component of in-store self-checkout. And in some cases, they're actually shifting to only in-store self-checkout. One of the Walmarts here in Austin actually only has self-checkout now. So they took all of their checkout bays and actually have made those self-checkout bays, and they've got one help station where they have some employees that can help, or they can check someone out. But those are the things we're seeing that are kind of here to stay now. The second big trend that we saw, and it's in that technology space, is that e-commerce and online ordering will continue to shape the layout of brick and mortar stores. So if you haven't seen this yet, most new brick and mortar stores are actually being built around the concept of that integration of the online and offline. So you can see that a lot with QR codes around the stores, the integration of specific designated pickup locations, whether that's for customers coming in to pick up, or delivery services that are coming to pick up orders and actually deliver those. You can see an example there in the bottom left corner of the slide with Home Depot. They actually have lockers now where you can actually buy your items online or through the app and actually come in the store and just grab it from the locker and go. And that chart there shows the growth of that click and collect sales from 2018 through what's projected for 2022. And what you can see there is that there's really a significant growth for 2022. They're thinking there's going to be $74.24 billion worth of click and collect sales. So buying things online and then actually coming in and picking those up in the store. And there's about a 15% growth there over the previous years. We saw a lot higher growth rates back in 2018 through 2020 as everyone kind of started to integrate that. But with the sales actually going up and the adoption being greater, we're starting to see some of that growth come back in there. And that actually changes how those retailers and restaurants build their actual stores. And here are some examples of how we can see that. Stores that used to just be big box brick and mortar retail stores are now really becoming kind of fulfillment first distribution centers. So if you've been to Walmart or Target or Dick's Sporting Goods or Lowe's lately, you can actually kind of see how they've changed the store to where most of that is really focused on distribution. And not only from the sense of just picking up orders in the store, but they're actually shipping orders from store stock. So they're using that kind of as warehouses as well. And so from a community perspective, if you're an economic development director or city manager, that has big implications for some of your zoning and some of the planning department efforts that go into getting a piece of land developed into an actual big box store. But some examples there, in the fourth quarter of last year, 95% of online orders were fulfilled at the store level through Target. And that's either between picking up in person, something that people order online, or them actually shipping an order from a physical store. So instead of having warehouses for e-commerce, they're actually going and grabbing that off the shelf and then shipping that out from the store. Dick's Sporting Goods actually fulfilled 70% of their orders from their stores. So they're actually taking 70% of online orders off of their stock shelves and putting those in the mail and getting those out and delivering those to customers. And that's actually cut their delivery time by 10%. And so that's something I think is interesting, because what we hear a lot of is, hey, brick and mortar's dead. E-commerce is huge. People are buying online. There's not going to be a need for big box or mid box stores anymore. And this is actually something that I think is important for the brick and mortar world, because it gives an additional sense of purpose for some of these brick and mortar stores. And actually, what we've seen helps expand that retail footprint. So instead of what people have said is going to be coming is this shrinking of some of the big box retail, we're actually seeing those larger stores invest more, not only in new store growth, but actually in the space and in the square footage of their stores, because it's kind of a hybrid fulfillment and retail store. And then that last example there is Lowe's. In 2020, Lowe's fulfilled 60% of their online orders from their stores. So that's a great sign. I think that just helps strengthen the physical brick and mortar retail presence. It helps from a sales tax perspective. And that's something that we're expecting to see really across the board as we go through not only just 2022, but really for the next 3 to 5 years. Another trend that we saw was delivery services really growing. And with the growth of those delivery services, that really helped further fuel the growth of new restaurant and fast casual concepts. And so when we look at what impact COVID-19 had on the restaurant space specifically, it really resulted in that food delivery app business doubling. So you've got DoorDash, Uber Eats, Grubhub, Postmates, a lot of those big delivery services actually doubled in size because there was so much demand for the delivery aspect of that. And with the convenience and the integration of those apps, that should continue to grow. That should become even more part of the normal kind of retail purchase process. And that's really helped it expand and fuel this opportunity for new restaurants. And not only just brick and mortar spaces, but we're starting to do a lot of ghost kitchens as well. And there's a lot of growth in having physical spaces that support that online world. Chili's, I think, is a great example. They actually have a new concept that has come out of their existing restaurants, where they have a concept called wings only, and they actually do buffalo wings and fries, and they do all of that in their Chili's kitchen, but you can't buy it there. You can't go eat at the store. That's only for DoorDash and some of their delivery apps. And so I think we'll see a lot more of that with not only just new concepts or ghost kitchens, but also existing restaurants that have their concept and then actually expand into some additional concepts as well. Sorry, guys, give me a second here. One more trend that we've seen that, again, started before the pandemic and really has started to roar up a little bit more is direct-to-consumer and online brands are going to continue to invest in brick and mortar presence. So you're probably familiar with a lot of the brands that started off as online only direct-to-consumer brands. You can see the pictures there: Warby Parker, Untuckit, Hari Mari, Casper mattresses. A lot of those online retailers have been going offline. Amazon's another great example of that. We've done a couple of Amazon Fresh grocery stores with some of our client communities recently, and we're starting to see a lot of those direct-to-consumer brands not only just invest initially in that brick and mortar space, but they're actually expanding pretty significantly. There's a lot of growth there. And so we'll see that continue through really the next 2, 3, 5, I think the next decade, as you get new brands that are coming in and actually starting to expand from that online space. So that's a great opportunity to kind of expand beyond just your typical brick and mortar stores and some of those big box type retail stores, because those new brands actually have life behind them. They're doing well online and they actually can invest in those brick and mortar locations. So Kyle, I'll let you take it from here on this last trend.
Yeah, no, definitely. Good job covering all that stuff, kind of starting out. But kind of talking about kind of what we've seen change on the retail and restaurant side. Just specifically, kind of fast casual restaurants are really what we see, or kind of the fastest growing retail sector right now. Is especially coming out of COVID, and even before COVID, if you think back years and years ago, the restaurants that didn't change with times and kind of stay up to date on the product they were providing and things like that were kind of left behind. And I think that's kind of jump starting some of this change that we're seeing now, visually with some of these retailers and restaurants. But specifically, I kind of want to hit on this Sonic concept. We had a call with a Sonic broker not too long ago, and he said that some of their stores were even almost doubling their sales during COVID and coming out of COVID, and he said they were almost COVID proof. The way they were set up for drive in, grab and go was really perfect to kind of weather the storm. And really what we're seeing now is other brands kind of copying what Sonic has done to an extent with, you see Shake Shack down at the bottom with multiple drive-throughs, kind of Kentucky Fried Chicken as well. And also retail stores that Austin kind of hit on as well. Austin, you can kind of go to that next slide there.
Yeah, but before we jump on it, I think the big thing there, Kyle, and tell me if there's any others that you've heard recently from retailers, but I think the big drive behind the new concepts is really those kind of three buckets there. Smaller footprints. Most retailers have told us they're looking to really drive as much efficiency as possible. So doing more with less space. The convenience factor, to your point, Kyle, with Sonic as an example, it's convenient. You can drive in, grab your stuff and go, or you can eat there. And then the last one's future proofing, being able to respond to pandemics and not have a lot of excess, especially from a space perspective. So that's really been driving what we've seen and heard just across the board. Kyle's going to talk about a few examples here of some of the new concepts we're seeing coming out that are based around those.
I want to mention about that is shrinking the store format, and ultimately what that allows you to do is have more sites that are available for these specific QSR restaurants that might have been looking at an acre in the past that are shrinking to a half acre or 3/4 of an acre. So that's something on the city side, the site selection side, to always kind of keep in mind that a site that might have not worked for a specific QSR restaurant in the past might be a possibility now. 60% smaller and focused on customer experience through multiple ordering and delivery means. And you might look at this concept and say, okay, well, how is Burger King going to get their product to kind of that outside lane? Kind of what we're seeing now is individuals, these concepts are kind of having almost a pulley system that resembles banks and things like that, to where they can carry the product, the food, kind of on a pulley system to that outside lane, which has been extremely successful. I think Chick-fil-A kind of pioneered that and paved the way there. But you've also got your your drive up where you order on an app and they bring it out. Specifically Shake Shack here, their in-person ordering kind of has specific lines for each way, whether you're going to order kind of the old-fashioned way in the drive-through or do the specific app delivery pickup. Everything is kind of geared towards ease for the consumer, making kind of experiential, I guess you could say, but focus kind of on ease, which is also shown here with Kentucky Fried Chicken. This location, they might have 2 or 3 tables inside, but you can kind of see online orders, 3 lanes, and then individuals that are working at the store would bring your bag out specifically to your car at the order here model. And this is going to be a smaller footprint store, that's not going to take up near as much space as kind of your traditional quick service restaurant. And kind of Taco Bill here, similar to kind of what we're seeing with other QSRs as well. Kind of tying in that futuristic aspect looks kind of crazy. But you heard me hint earlier on kind of the unique way to get food to other drive-throughs, kind of looking at similarities to a bank here. But that's what they're doing. It's how things are changing. And we're not saying that every single concept that's going to be rolled out is going to be this new concept. They're kind of in that testing phase now. Austin kind of hit it on the specific restaurant in California that's kind of be their first one. They're rolling out the Chick-fil-A that's only drive-through. They're kind of testing the waters to make sure these concepts are going to work. But everything we've heard has kind of been gung-ho, and the reviews have been great. So just kind of some background ideas on some new concepts that we're seeing being rolled out throughout the country right now.
And Kyle, real quick before we talk about some of the more traditional retail concepts and how they're changing, I think a lot of the time when we're talking about these new concepts, we're talking about fast food and quick serve and fast casual restaurants. Mm-hmm. I think we've seen a lot more of the adoption with that industry or that segment of the retail world because of just the nature that's already where they were from a mindset perspective. But we're seeing them kind of advance that and go more towards that convenient aspect. One segment we don't have in here from a new concept perspective that I think is worth highlighting. We got a chat about the dark store concept for grocery stores. And we're starting to see that a lot more too, where you'll actually have a grocery store that either takes part of their store or has a dedicated physical space. It's not actually a public facing store, but it's a dark store where they're fulfilling a lot of orders from, or they're ordering online and people can come by and pick up groceries, but they're not going to have shoppers inside. It's all going to be pickup or delivery. And so we're seeing that really kind of translate over to traditional retail and grocery in different market segments outside of just the fast casual and the sit down restaurant world. From a traditional retail perspective, I think we're seeing some of the same transition as well. Obviously, they're not going to have a lot of drive-through lanes. They have pickup stalls and things like that. But this example for Macy's, they're focusing on the flexibility aspect. So they've got 20,000 square feet of what they call flexible retail format, which is offering more of that experiential aspect and what they call programming. So instead of just dedicating their entire store to the same product lines they've always had and maybe coming in and swapping some out, they're having some flexibility in there as well. And they're kind of reshaping that store experience to where maybe for 3 months to 6 months of a year, there's a certain concept in there, or they're bringing in a store within a store concept, which is something that we've seen with Ulta, for example, and some of the makeup concepts. You've got Sephora as well, where you've got Kohl's that's actually having a store and a store concept with Sephora, and they're starting to kind of play with store and store concepts with different brands. So it's not just limited to that fast casual quick serve world, but kind of originated out of there. The other that we're seeing is Michael's. So you've got kind of the reimagined store layouts where they're really centered around the customer experience. And so you kind of see that experience and flexibility aspect. The Michael's concept is interesting because it's really kind of no frills. What they're basically doing is they're basically creating a space for people to come in and engage with the retail product and then actually use that product there. So to come in for classes and training sessions and to have the kinds of things that you would want to have in a workshop that you might not have at home that you can actually use in store. And so we're seeing some of that evolution there as well, where it's really kind of driven around the convenience aspect, the integration of that online, offline, and then that flexible user experience where you can kind of change the store and drive the store in a different direction instead of just being for the retail aspect. So Kyle, I'll let you talk a little bit about the retail outlook and those specific retailer expansion plans. I think from a high level, what we've seen and heard, and really more so recently, we've been to a couple of conferences recently. Our team was actually out at the Retail Live event last week or the week before last, and we have I think 3 or 4 different regional conferences coming up in March and April. But what we've seen is really, despite the pandemic and what we call misconceived notions of the retail market, a lot of those retail brands have fully recovered from COVID, and they're planning to add additional brick and mortar stores, not only through this year, but through the next 3 to 5 years. And in a lot of the case with most retailers, they're coming back to those pre-pandemic kind of early 2020 expansion plans. But a lot of them has actually come back and said, hey, we did a lot better than we thought we would during COVID. And we think we can expand more than we thought we were in early 2020. So Kyle, I'll let you talk through some of the brands that are expanding.
Yeah, no, you kind of hit the nail on the head there. Is, kind of what we're seeing is all these retailers and restaurants, whether it's a quick service restaurant, a sit down concept or a retail store, they're kind of going back and hitting those communities that they plan to open in 2020, 2021, even a few years out. And now they're kind of looking at new deals. So here's a list of, kind of retail brands that are expanding in 2022. And, I tell you, there are, many more than this, but, one thing that kind of stands out is this is a very good, even mix of brands. So you're not just focused on specific restaurants, which are, or tend to be kind of the fastest growing retail sector right now, but you also have Old Navy, TJ Maxx, Marshalls, everybody knows Family Dollar, Dollar General, Dollar Tree, opening a ton of locations right now. But kind of what we're seeing with the retail stores, Marshalls, TJ Maxx, Old Navy, the larger kind of concepts is, I'm sure everybody's familiar with this, but they're kind of shrinking their format, which Austin kind of hit on in the slides before this. But kind of really focusing on how can we change what we've always done and kind of improve it to draw in the experiential retail and things like that. Delivery, the aspect is always going to be there. Personally, I had a meeting last week with an individual that was talking about kind of Target's delivery option and their grab and go. And, she was like, I don't know if I'm going to go back in the store. And, that's kind of tends to be why some of these grocery stores are rolling out dark stores. So it's one of those things that, even though things are changing, we're seeing a lot of retail brands open up new locations in 2022.
And I know we know that there are a lot of brands expanding. I think some of them are still coming out with specifics, and they're kind of slowly rolling those plans out. Let's talk a little bit about some of the ones we have specific numbers for, and kind of where we're seeing that. Because I think this list is more so geared towards discount department stores, grocery, some of that fast casual quick serve. A lot of those did well during the pandemic. But let's talk through some of those specifics. Is there anything you think anyone should be interested in specifically, Kyle, in terms of who's announced numbers of stores or specific areas?
Yeah, I mean, kind of what stands out to me or kind of the department store, you got TJ Maxx, Ross, the Burlingtons of the world is kind of what I've seen personally is a need in most communities we're working. We need more clothing stores, home specialty stores, and things like that. And, just being able to look at this and say, okay, Ross is planning to open 100 new stores this year alone. And TJ Maxx 170 new stores in 2022. And, for your community, you might not be on that list right now, but you need to be thinking for, 2-3 years out. How can we get on that list? How can we better position ourselves to get in touch with the right contacts for all these specific brands? Costco as well, opening 60 new stores in 2022. Everybody wants a Costco. I know specifically they look at deals, sometimes 4 years out. So it's one of those things that's, how can we best position ourselves to get on the list of these retailers and restaurants?
Yep, exactly. And a couple of other examples that are a little bit more regional. I mentioned Amazon earlier. We've done a couple of grocery stores with Amazon recently. they're actually planning to open large retail locations that are more like department stores, where they're going to bring in a different mix of goods and really kind of jump into that department / discount department world. Slim Chickens is another one that I think is interesting. That's a kind of a Southeast-based brand, and they're focused a lot on growth in the Southeast, but they're doing 30 units in North Carolina alone. So you're starting to see a lot of that growth. A lot of the retailers and restaurants that have been on pause, if you will, or kind of timid about entering some of those smaller and mid-sized markets are starting to do that. So that's really exciting for us. I think when we look at this list of some of the specifics and then that larger list of some of the more broad retailers and restaurants that are expanding, I think as we get through the first and second quarter and we see some of that recovery go full swing from COVID, I think we'll see a lot more on that list in terms of who's actually expanding and who has the capability to expand. The one area that I would say we're probably the least optimistic is movie theaters. I think movie theaters have been hit the hardest by COVID, and just with the evolution of entertainment and the on-demand world. We're interested to see what happens there. For a while, there was a lot of positive momentum in that space and really in the larger family entertainment space. But that's the one that we've seen that really hasn't recovered as well, and that we're still kind of watching to figure out what's going to happen with specifically movie theaters, but that family entertainment space as well. For the most part, though, most of those family entertainment facilities are coming back. We're doing a couple of deals with some of the larger arcade and entertainment and bowling kind of entertainment complexes, and they seem to be really fully rebounding as well. So the one that we're really worried about is really kind of theaters, but outside of that, it seems like from what we've heard from a lot of these retailers, most of them are getting back to their pre-pandemic form. So Kyle, jump in here if I miss anything. In terms of what do we do with this information? Here are some of the recommendations we have for just some of the actionable retail recruitment. Kyle, you touched on it with the expansion stuff. If you're not actively recruiting those retailers and restaurants and looking at that expansion list and actively communicating with them, start doing that. Start reaching out to them. Make sure that you're on their radar. The retail recruitment world is always evolving. It's really frustrating because you get a lot of no's, but something that is really great about this world is that a no today could be a yes in as little as 3 to 6 months or a year from now. And so it's really important that you're getting on the radar for a lot of these retailers. Make sure that you've got 2022 demographic data. We can help you with that if you don't have that, but make sure you have that for your city. Make sure you have updated demographic numbers for your city for key specific available sites, whether that's retail space or land that could be developed. Make sure you're marketing your community and you have the most accurate data. Really know your retail trade area. If you don't know what your retail trade area is, or you haven't had somebody come in and actually analyze what your actual retail trade area is, you're not competing as well as you should be with other communities. So really dig in, find out what that trade area is, have someone like us help you with that, because it's important to have that to really convince these retailers that there's opportunity. In terms of planning for some of the new concepts and some of the new growth, really evaluate your planning, your zoning, really your just overall development process. There's a lot of kind of nuanced things that are coming into play with some of these new concepts, especially the drive-through concepts. Do you have access for multiple drive-through lanes? Do you have planning ordinances or codes or zoning that might prevent that? Do you have to have a conversation with the Department of Transportation and make sure that you can get left in, right out cuts, and that you have all that you need for the curb cuts and all those different kind of things? Parking requirements. Parking requirements are interesting. Really what we've seen nationally is that parking requirements, specifically for retailers and restaurants, have shrunk a little bit. So where you used to have large power centers that needed 3 parking spaces per 50 square feet or 100 square feet, you're not having that much of a parking restriction anymore where you need that much space. So being able to make sure that you're flexible to be able to put in new developments and not have to have as much parking as you thought you might have had in the past, all of those things come into play. Signage as well. And then ultimately just that land use planning, make sure that you're protecting your key retail sites and really focused on highest best use and making sure that you're positioned to do something good with that available space. Kyle, I know we've had some recent conversations with communities about some of these with new developments that we've been working on. Anything else you would recommend, or anything I missed on that list?
Yeah, so one thing I would add is kind of site requirements. So do kind of some research. We obviously help with that, but know what specific requirements these retailers and restaurants require for specific communities. Austin kind of hit on home retail trade areas. Chick-fil-A, for example, they're going to want to see a certain threshold number that retail trade area is going to want to hit. They want to see certain income, some certain average age, median age. It's all scientific for these retailers and restaurants these days. They know exactly what they need to be successful. They're going to need roughly 2 acres. They're going to want a double drive-through because everybody's been to a Chick-fil-A and kind of see how that line can wrap around and get out on the road. Understand what type of market you are. If you struggle to get a Sonic, then chances are you're probably not going to get a Chick-fil-A. So do a little background research, see kind of who you are as a community, which we help with as well. And then kind of see kind of some different requirements that retailers and restaurants look for when looking to locate the community.
Right. And I think one last point from our end, a lot of the national retailers and restaurants have done well, and they've had the resources to weather the pandemic. The bigger victim from a retail perspective has been local business, mom and pop businesses. We do a lot of downtown redevelopment, a lot of work with franchisees and entrepreneurs in smaller communities and communities at big downtowns. And they've really been hit the hardest. So, continue to support those businesses. If you have any city initiatives, or if there's anything that you can do from a municipal perspective to continue to support those businesses. A lot of them are adopting a lot of the same techniques and integrating a lot of the same technology that the larger retailers are, but they don't have all the resources those larger retailers do. So, continue to do anything you can to help those retailers. If you have the means or the resources, we're able to help small businesses with some of the cell phone data that we have in communities. We can actually help them understand where their customers are coming from, what product lines do well, where there's retail leakage, or where there's an opportunity to add some product lines that they could actually get some sales from. So, that's really important. I think something that often gets lost in the mix in this conversation. So we just want to encourage you, if you've been doing that, keep helping those small businesses. They really are the lifeblood of a community. National retailers want to see a healthy mix of local business and national businesses too. So retailers look at that as a signal for overall community strength. So anything you can do to support them, we encourage that and are happy to help if there's something we can help you with there from a mom and pop merchant or a downtown Main Street type program. But just want to make sure that people recognize that and focus on that. I know most of our audience here today is very aware of that, and it's a challenge you face daily. But anything that you can do to help those mom and pop businesses, it really does hurt the community when those businesses can't make it, or there's kind of a revolving door there. So we'll jump into Q&A from there. We've got about 10 minutes for Q&A slated. We can always go longer if we get more questions, but wanted to get through that pretty quick and then let you guys drive the conversation and talk about anything from expansion plans or what we're seeing, or any questions you have around the general state of retail. We'd be happy to answer. Kyle, I'll go ahead and jump in with one of the first questions that we got here. It was basically on the expansion side. So, a lot of the retailers and restaurants that are expanding are in that sort of fast casual, quick serve space, or that discount department store space. So you might get TJ Maxx or Marshalls, or even from a big box perspective, Sam's and Costco. The question was, it's hard to get a lot of our council members excited about some of those concepts. Is there still value in getting those brands to the community, even if they're not necessarily the Nordstroms of the world or the Chick-fil-A or some of those, really highly sought after brands?
Yeah, no, I think I kind of hit on it earlier. You got to understand what your opportunity is. All new development, all new retailers that, restaurants that locate in your community, that's a positive. there might be individuals locally that don't get excited about, a Sonic, a Slim Chickens, a TJ Maxx, but overall you've got to, keep in mind that that's helping grow your community. That's helping more people come and visit, shop in your community, giving alternatives to what's been there previously. So small wins like that over time, add up. I would consider, helping a client community of ours open a Sonic. I mean, that's a big success. And like I said earlier, some communities, the opportunity is a little bit different than others, but any win is a big win, kind of in my book.
Yeah, and I think there's a few different layers there. I actually had a conversation the other day with a council member in a community we're working in. It's a community with a population of just under 5,000, but they have a daytime population that swells up over 20,000 of people coming into the community working, and their trade area is actually up over 60,000. So really large trade area for a smaller community. And we've gotten 3 or 4 big box discount type department stores to come in and refill a large big box vacancy. And one of the council members was saying, hey, help me understand how to help people get excited about this. I know there's a need for it. I know people like these stores. They're going to shop there, but it's not as exciting as some of these really flashy retailers. And I think the main selling points there are, from our perspective, you're going to generate sales tax that you weren't generating. So you're going to benefit from a community perspective of getting that additional sales tax. It's going to help fund your city budget. It's going to bring in new jobs to the community. You're also going to get some additional growth out of that. We focus a lot on what's called retail leakage. And so when people are leaving the community to go buy goods and services, when you bring in 3 mid or big box retail stores, you're going to keep a lot of that leakage in the community. And so where you might be in a community where most of your shoppers are conditioned to have to leave the community to go get goods and services, getting new retailers or restaurants, even if it's not the highest end or the most flashy retailer, is going to help condition them to say, oh, there's some stuff I can stay in town and get. So instead of leaving town 2 or 3 times a week to go get stuff elsewhere, I might leave once a week. And so you're going to keep that in town, keep those community members there, kind of change their habits and help shift towards, oh, I can get things here in town. And then the other aspect of that is, we call them signaling retailers. This community actually wanted to target. And so they have a big focus on, hey, we want to get Target. We want to do whatever we can to pull the timeline in and how long it takes to get a Target to the community. And so they were afraid that if they got in these 2 or 3 new discount department type stores that offer a lot of the same goods and services that Target might, that would scare Target away. And the retail world is so interesting. Target actually looks for some of those signaling retailers to be in the market before they're even interested in the market. It's more appealing to them when they see a market that has your Marshalls or Big Lots or TJ Maxx's of the world, because that means there's enough demand there and there's enough of a synergy between those retailers. So it's actually kind of counterintuitive. They actually want to see those base level retailers there first, and then they'll come in on top of that. But it's actually more beneficial to have some of those retailers than it is a drawback to have some of those options available.
Yeah, there's no doubt. I mean, when I travel and have meetings, a lot of individuals think competition's a bad thing, but it usually drives success. For example, CVS and Walgreens. If you think about it, Walgreens goes in and CVS kind of sits back and they're like, okay, Walgreens is doing well. We know we can go in and do well in this community just based on having that replicated, thousands of times throughout the country. Whether that's in Mississippi, where I'm from, in Texas, California, Illinois. That's just kind of how it works. Everything's very scientific based these days, and really before these retailers and restaurants open up a store, they know 100% that they're going to be successful based on site selection and kind of other factors as well.
Yep. Another question that we had come in was about some of the retail conferences that are coming up this year. I know we'll be at a few coming up. The retail conferences through really the end of last year have been kind of disappointing for us. Wasn't really a good gauge of how successful they'd be. There wasn't as much attendance as we thought. but the few we've been to this year have actually been worth going to. A lot of people often say, is it worth us going out to the ICSC Recon conference in Vegas? That's kind of the gold standard, the largest event they have. I would say if you're a community that is in that 10 to 50 or 60,000 population mark, and you're looking at where to invest time and resources for events, I would look at a couple of the regional events that are coming up and maybe look at those first, and then kind of gauge off of that if it's worth going out to the Recon conference in Vegas. We've been really surprised and optimistic about what we've seen from the new conferences this year. We'll be at a few in this month, actually coming up in March. We'll be out at the Monterey conference in ICSC in California, the 8th and the 9th. And Kyle, and I know you and the rest of our team will be at the Red River conference, the ICSC Red River conference at the end of the month there in March and the 1st of April. I think Riley, I think you guys are going out to the Retail Live in Orlando as well, right? Yeah, so I would look at some of those. I would say probably start with ICSC and Retail Live. Those are both really good organizations. That's kind of the primary regional conferences that we go to. And then from that national conference perspective, we're expecting that Recon out in Las Vegas, the ICSC show, should be a lot better this year than what we experienced last year, especially with most of the retailers getting back to that expansion plan, and then hopefully not having the restrictions with COVID vaccines and some of the stuff that went along with last year. So definitely think it's worth investing in those if you have the resources from a competitive perspective. You don't always have to have a booth, but being there and having those meetings is certainly helpful if you're looking at some of those conferences.
Yeah,
absolutely.
Kyle, in terms of if a community is going to one of those conferences, what do you recommend in terms of just base level data or how to make the most of your time at those conferences if you're going to talk to a retailer or broker about a specific site?
Yeah. So, we kind of take what we consider our retail market profile. So we can provide, pages and pages of data, but when we go out there, we want to make it as simple as possible. So we have a front and back flyer. It has, retail trade area population number, average and median age, race distribution, incomes, a location map, and then also it has a existing retailers map on the back, which is kind of neat, which we kind of just finished up talking about with retailers and restaurants kind of like to staying in synergy with other concepts when they choose to locate. That's something that's a key. When you go out there and you plan on talking to somebody, especially at the show in Vegas, you kind of need to have your schedule laid out ahead of time, who you want to talk to. Push to get those meetings set up ahead of time, because if you haven't been to the Recon show in Las Vegas, I think they kind of rebranded it, the name, but it can get pretty rampant out there, and one meeting goes late and then you have to walk from hall to hall, and next thing you know, it's kind of thrown off your whole day. So you got to go out there with a game plan, which we kind of help formalize for our clients. But you don't get a ton of time to talk to these individuals. We kind of call it speed dating. So you need to have kind of a short punchline to talk to these individuals out there, and then the follow up is kind of the real important part, where you follow up with this retail market profile, follow up with specific site requirements that might fit what that specific concept looks for that you're talking to. Sometimes it may be best to go to the more regional show if you haven't been to one before, just to kind of get your feet wet and understand what goes on, kind of going before you go to the big show in Las Vegas. But kind of like Austin said, we have high expectations for all these shows this year, kind of and moving forward.
Yep. And real quick, we've got a little bit more time. If there's anyone that has any additional questions, Riley and the team is watching that chat box and Q&A, and Kyle and I are looking at that as well. So if you have any questions you want to ask us, drop those in there. Kyle, one of the things I think a lot of the communities we work in, they try to do too much, right? So I think the big thing from a conference perspective and getting in front of retailers, really basics are the best place to start. Don't feel like you have to do too much to start. basics in terms of having updated demographic data, really know the competition in your community, know what opportunities are available, know your retail leakage, core trade area data, but really focus on all of that first before, investing in a bunch of huge marketing programs. If you have the resources and you can do it, that's fantastic, but don't be overwhelmed. The best place for us for communities to start is just having updated data, having an available list of inventory in terms of available retail space, whether that's existing or it's land that's developable. That's going to help you make the most out of those events and make sure that you can really, get good feedback.
Yeah, and kind of to build on that is this is a long-term process. This isn't something that happens overnight. So if you go to one of these retail shows, don't expect to finalize a deal on day one or day two. This is the ground up development of getting in touch, talking to the right people, and then kind of seeing where it grows up from there. But keep in mind that this is a long-term process. I mean, we finalized deals that were 5 or 6 years in the making from the first time we talked to Chick-fil-A. So don't get discouraged if you go out there and you don't have a ton of immediate success. Just go out there, get as many business cards as you can. I always like to say, if you're taking something, walk off, jot down a few notes, and then the follow-up is what is really important. Just making sure you're talking to the right people to where you can grow those relationships moving forward.
Yep, absolutely. And you touched on this a little bit with expectations. I think the biggest thing, and certainly a lot of our audience already knows this, but for council members or maybe city staff that isn't as familiar with retail recruitment or how the process works, most of the time you're not going to go to one of these conferences and come back with a deal, right? You're either going to start a conversation at a conference that ends up becoming a deal a few months down the road, or you're going to have a meeting at a conference that is kind of the culmination of lots of conversation, lots of market analysis, site visits that ends up with a deal being done with a retailer coming into the market. So that's something we always try to help with in terms of just kind of setting and managing expectations, especially for council members or staff that aren't familiar with that process. I think it's easy to think, okay, we're going to go to the show, we're going to have good conversations, and then we'll get retailers to the market. That does happen. It just doesn't happen in that sequential process. And in the retail world, stuff doesn't usually happen quickly. So you're usually starting that conversation that will end up being a deal, or you're getting a deal done there that has been in the works for a few months, or even in some cases a few years.
Yeah.
Kyle, one other question here that I'll direct to you first. What are we looking at, or where do we see the most opportunity for the next 12 to 18 months in terms of retail categories, retail segments? I know we talked about them a few here, but the question is, where should we focus in terms of who's actually expanding, or where there's the most opportunity, just kind of in general retail categories?
Yeah, I know we talked about it, but really kind of what I'm seeing all over is really those quick service restaurants, and also kind of getting to the point where the casual sit downs are expanding more. They were hit extremely hard due to COVID, but kind of starting to looking at different locations. We talked about Texas Roadhouse, that was on the list. Outback Steakhouse is looking at locations, Olive Garden. So they're kind of falling a little bit behind the quick service restaurants, which was expected. And then we're also seeing retail stores, kind of the junior box type concepts, TJ Maxx, Marshalls, Ross, looking at a little bit smaller footprint than they have in the past. That's kind of what we see leading the way. And then also grocery stores as well. All the Trader Joe's, the Walmart's opening up stores, Costco. So, I mean, it's a wide variety, but I think you would probably agree with this. Kind of that quick service is what we see leading the way, just because it makes more sense. It's a smaller footprint. It's easier on consumers, doesn't take as much time, just kind of goes hand in hand with the trends we're seeing, as individuals liking things quick, where they can go, always on the move. But that's kind of what I'm seeing.
Yeah. And you hit every one of the ones I would touch on. I think a great example of that is Raising Cane's. They are a quick serve restaurant, but I think we actually kind of lump them in with fast casual because they're a little bit more elevated than your typical quick serve restaurant. That general category, I think we've done like 30 Raising Cane's over the last year. Or 18 months, and they're growing fast. That whole category, whole segment's growing fast. Something that wasn't asked in that question that I would encourage you to focus on as well is focus on those retail growth categories, but also focus on developers. There's a lot of retailers that have gotten smarter about the markets they go into, about the co-tenants that they need to be with. And so a lot of times it's not necessarily easier, but you might be more successful targeting developers that can come in and commit to a property and put a concept plan together and get the co-tenants that you need to come in and actually develop a site. They oftentimes, retailers will follow a developer if a developer gets a site and has a concept plan that works. So I would say all the segments we talked about, and then actual developers as well that can come in and do those mixed use type developments, retail developments, strip centers. You might have some success that way as well. So we're running up on our time limit here, so we'll probably leave it there. Thank you so much for joining us. If you have any questions or there's anything that we can help you with, or might be able to be a resource for you, please feel free to contact us. Both Kyle and my email addresses are on there. Feel free to shoot us a message or give us a call at the office, and let us know if there's something that we can do for you, or if you have any other questions. Kyle, anything that you want to leave anybody with, or any recommendations you would give as we wrap up?
No, I think that covers it. If y'all are ever looking for any retail recruitment, any data packages, any one-off questions you have, feel free to kind of reach out to us. We work in larger communities, smaller communities, and really don't have a one-size-fits-all package. So we'd look kind of like to talk to y'all and pick your brain about some needs that you might have, and would love to help any way we can.
Yeah, awesome. And I'll echo that. Happy to be a resource if we can. And with that, thank you for joining us. Just one quick reminder, Riley, I think I'm probably beating you to the punch. This is recorded, so we'll send out the slides in the recording. So be on the lookout for that. And then if there's any other follow-up, we'll be available if anybody needs us for anything. But thank you so much for joining us. We appreciate your time and hope everybody stays healthy and safe. Thanks so much.
Thank you.
Thank you.